So you might remember this scene from the Shawshank Redemption, right? Where Andy Dufresne is up on the roof, risking getting thrown off by Captain Hadley, and he tells him that Uncle Sam can't touch a cent of a $35,000 inheritance. He tells the guard to gift the money to his wife, claiming the government allows a one-time only gift to a spouse up to $60,000. It's one of the most satisfying cinematic moments of the 90s. It gets Andy and his friends some cool beers on a hot roof, and it establishes him as the prison's resident financial genius. But is this actually true, or did Andy Dufresne pull off his very first con right there on that roof? If you look at the actual history of US tax law, Andy's advice was, well, total fiction. First of all, the scene takes place in 1949. Back then, there was no such thing as a one-time only spousal gift exception capped at $60,000. In fact, the tax system back then, just like the tax system today, had an unlimited marital deduction. If Captain Hadley wanted to give money to his wife, he could have given her every single cent without paying a dime in gift tax. No special one-time paperwork required. Additionally, any estate tax on that inheritance would have already been paid by the deceased person's estate before the check ever reached Hadley's hands. So, Hollywood took some major creative liberties. But that brings us to the bigger question. What is the actual truth about the US tax system when it comes to inheritances and gifts today? If you suddenly found yourself holding a pile of cash, how much does Uncle Sam actually take? To understand the truth, we have to clear up a massive piece of confusion. People often use the words inheritance tax and estate tax interchangeably. In the American tax system, they are completely different animals. An estate tax is levied on the cash and property of the person who passed away before it gets distributed. Globally and federally, this is where the big numbers live. But unless you are inheriting from a multi-millionaire, you don't have to worry about it. Nationally, the federal estate tax exemption sits at a staggering $15 million per individual, or $30 million for a married couple. If the estate is worth less than that, the federal government doesn't touch a single penny of it. An inheritance tax, on the other hand, is a tax paid by the person who receives the money. Here's the big secret. There is no federal inheritance tax in the United States. None. Zero. If you inherit money, the federal government does not view it as income. You don't report it on your standard income tax filing, and you don't pay federal taxes on it. Now, a handful of individual states do have their own state-level inheritance taxes, but even then, spouses and direct children are almost always entirely exempt. But what about what Andy talked about, gifting money while you are still alive? The modern rules around the US gift tax are widely misunderstood. You might hear people say, you can't give someone more than $19,000 or you'll get taxed. That is a myth. The $19,000 figure is just the annual exclusion limit. It means you can give $19,000 to your friend, your cousin, or a complete stranger, and you don't even have to tell the IRS about it. You can do that for 50 different people in a single year if you have the cash. Woo! What happens if you give someone $50,000? Do you pay a massive tax? No. You simply have to fill out a piece of paperwork called Form 709. This form tells the IRS that you went over the yearly limit. The excess amount is simply subtracted from your lifetime $15 million exemption. Essentially, you only ever pay out-of-pocket gift taxes if you give away more than $15 million over the course of your entire life. And once again, gifts between spouses remain completely unlimited. So, what's the final verdict? If Captain Hadley stepped into a time machine and walked into the modern IRS office with $35,000, he wouldn't need a brilliant banker to hide it. The system is already designed to leave that money alone. Andy Dufresne's tax advice might have been completely wrong by the textbook, but as a piece of storytelling, it was brilliant. It proved that sometimes confidence, a little bit of jargon, and the right timing are worth more than the tax code itself. It got his friends a break, it got them some beers, and it gave us one of the best scenes in cinema history.